Casey Gregersen, owner of Wyo Houses. We buy properties across the state of Wyoming and Montana. In 2023, we bought all different types of houses. We bought vacant houses. We bought houses about to go to foreclosure. We bought houses that had issues with tenants or difficult tenants. And the biggest thing was we bought a lot of properties that needed significant renovations before they could be sold. If this is one of your properties or you ultimately just need to sell, fill out the form below so we can get on a call and I can help understand your situation and ultimately solve your problem. 2023 was a very volatile year in the real estate market, from interest rates being pushed up all year long, tons of interest rate hikes, right? Some markets dropping in price. You saw some big commercial and multifamily operators like struggling with floating interest rates. But really what we're most excited about is finally seeing a little bit more stability in 2024 and really taking that momentum, because in 2023, it took a while for a lot of companies to balance, hey, what is it like in this new market where things are so volatile? Well, now I'm excited because we finally really gotten a feel for that, and it's giving us momentum into 2024. One of the things I'm most excited about in 2024 though, by far, is we finally have it from the Fed that they are planning to drop interest rates in 2024. But we're still kind of got this little gap right now where rates are still high. We know they're going to come down. We're still kind of in the winter part, like we're in the early months of 2024. So in a lot of the markets we invest in, like Wyoming and Montana, it still hasn't quite warmed up enough for everybody to come out and start buying. So we're finding a lot of sellers that have a lot of motivation, and it's really helping us load up our pipeline. And again, with the cyclical part about the market, what we found in our past is buying properties in the winter into the early spring is the best time to be buying, because then we can get in there, we could fix them up, and we could be listing these properties come early summer, which is the most opportune time. And honestly, this might be one of the hottest springs and summers in several years because of the lack of inventory and the fact that interest rates might finally be dropping. But let's talk a little bit more about inventory. This has been the thing that's really, I think, kind of held up the real estate market over the past year, despite interest rates like just climbing to, no one would have ever thought they would have climbed that fast. But because of the lack of inventory in markets like where we invest in Wyoming, Montana, we didn't even see a drop. And actually across the nation, this is a really crazy stat. House prices still appreciated in 2023. Despite everything I've been talking about, I think it was still about a 7% appreciation, which is, to me, really wild. Actually, a really cool stat that we found out is in the last 75 years, there's only been 5 or 6 years when the properties actually decreased in value. All the other 70 years, it was appreciation. And as you know, over time, real estate goes up. But I mean, literally 5 years in 75 that you didn't see property prices go up. So talking more about inventory, right? If you look at back in 2008, 2007, before the big crash, there was a ton of inventory on the market. There were a lot of builders. There was more inventory combined with the banking crisis. That is what really caused prices to see that huge correction, right? The difference is today is there's not enough inventory. All those builders that were building in 2008, 2007, they got knocked out, and a lot of them never restarted. So house builders, new construction really has not caught up. It's not even close to caught up. It's still not, like if you look year over year over year, there's more people wanting properties than properties being built. And if you haven't looked at this data, it's staggering. So that has me bullish in two reasons. It has me bullish to continue to buying properties off market and fixing them up and selling them, or keeping them as rentals, because I think they're still undervalued. And the other big piece, which we're really excited about in our company, is doing more new construction, because again, there's just not enough builders out there. And there's all this demand to still have new construction based on supply. So we're really excited. I think it's a very opportune time over the next couple of months to be getting in and buying properties. Because one of my other favorite phrases is date the rate, marry the property, right? So you can go in and buy properties now. It's not going to be a pretty rate, right? But if you could still make a cash flow, or maybe you got to put a little bit more money down than you wanted to, but get into properties now, because come this summer, and I'm not a fortune teller, but all the indications are that based on lack of inventory and rates dropping, a lot of people are going to come back into the market. This might be just retail buyers who've been on the sidelines waiting for rates to come down. This probably is all the hedge funds that were like buying like crazy several years ago, and they've taken a little break. So all those people are going to be back, more than likely, buying this summer when things heat up. And if you wait to buy then, you're going to be, more than likely, it's going to be bidding wars. You're going to be having to overpay for this property. So why not go buy the property now at a good price, because sellers are still very motivated today, which is what I love. That's actually what's helping us get into a lot of creative finance deals and also buy at a discount. So I really advise people, and this is what we're doing in our company, is we're buying right now because we're buying at a discount. We're not competing with a bunch of other competing offers. We're not in these bidding wars, and we're actually getting concessions from sellers. So right now, buy, and then we're really excited to, in the cycle, especially when we're fixing and flipping, once a lot of these properties are fixed up and bought, come this spring and summer, it's gonna be a great opportunity to sell. One of the other things I'm really excited for in 2024 is multifamily. So it's been really cool to kind of see how we've evolved in this space, right? Several years ago, we bought our first 14 unit in Laramie, Wyoming. All those units were rented around $600 a month. We were actually able to double the rents to where a year later, we had that whole building rented at $1,200 a month. That was a complete game changer for that asset. And guys, the value, like when you're looking at the value of that property when we bought it versus once we got the rents up, it hasn't doubled, but it's been a significant increase. So then the cool part about that is we went and applied that strategy of taking 14 units in Laramie. And then last June, we went and bought a 63 unit apartment in Casper. It's the same concept, except a lot more renovation. So we've been working on this property since last June, and I'm really excited about this property to be completed. And we're targeting in end of Q2, early Q3, to where that building is gonna be hopefully close to 95% occupied. All the remodels we've been doing all fall and all winter and all spring should be complete. And really excited to see that asset at a high performing level. So with that success of a 14 unit, now a 63 unit, we're excited to do more marketing and look for more assets like these, because I just found in our markets, there's a lot of properties that are run down, they're maybe mismanaged, or the current owner is not maybe extracting all the value from that asset. So we're really excited to start marketing those assets and to those sellers and bring on more projects like that, which ultimately is gonna need more partners. And kind of a lot of the consensus and feedback I've got from a lot of the private money lenders I work with is everyone's excited about multifamily and getting into the multifamily game. So really excited to partner with different people on those projects and continue to leverage our team, from our property management to our renovations teams, to where they can get in and take these multifamily assets and increase the value. And there's no better way. We talk about the BRRRR strategy a lot. Using the BRRRR strategy on multifamily and doing it at scale has been probably one of my favorite things we did in 2023, and we're gonna do a lot more in 2024. Another thing I'm excited about is construction. This is another building block we really set up in 2023, is building out teams in multiple markets. Now we have a full team in Sheridan, Wyoming, in Casper, Wyoming, and in Laramie. We also use contractors in Cheyenne and Billings, but we've been building out this team to where we could take on more flips, we can manage more rentals, and actually we can start to service and help other investors, to where we can actually, if they're needing help with a flip and they don't have contractors, or if it's just a simple handyman for a rental portfolio, we're actually providing our service and letting people use our contractors to where they can get some dependable work and get work. The biggest thing is having dependability and timing, right? A lot of contractors are months out before they can do any work. But we're actually taking on more people so we can help them, help them with their fix and flip rental properties, or even just a retail customer who wants to get their kitchen remodeled or build a new deck. So we're really excited to build out that company. It's one that's taken a lot of time to build out that team and a lot of resources, but we're very, very excited in 2024 to really let this team start to expand and help us grow our business and also help other people grow theirs. The last thing I'm excited about, and I've been excited about this one for the last 12 months, is creative finance. This environment was really created when interest rates shot up, and all of a sudden trying to buy property at 8-9%, a lot of people couldn't buy anything. But also it was preventing a lot of people from selling their house, because there were more houses on the market, but more importantly, there were less buyers on the market because of a lot of people were knocked out of the game because of interest rates. So what this has really allowed us to do is pitch more creative finance deals. And honestly, guys, this has probably been the biggest growth we've had in our business over the last 12 months, is negotiating and getting these seller finance deals. It's helped me build my rental portfolio. And the coolest part is we've been selling more of these sub-2 or owner finance deals to other investors, to where it's really cool, where we're able to actually go in and negotiate the terms, get the property under contract, sometimes close the property. And then what we'll do is we'll go sell that property to another investor, to where all they have to do is come bring a down payment, and the financing is all lined up for them. I'm really excited to do more of this in 2024 with elevated interest rates, and it's just becoming more common, and more sellers, and honestly, we've gotten better as a team at marketing toward these sellers actually negotiating and getting these deals under contract. And then how to actually manage them, because it's the paperwork and how to set up a sub-2 deal or set up a seller finance deal. That takes a lot of reps and a lot of legal paperwork, and we're really getting good at standardizing that. And I'm excited to do a ton more sub-2 deals. We've got about 5 or 6 of them right now in our pipeline that we're gonna be selling to other investors. So as you guys can see, there's a lot of reasons I'm really excited for our company to grow in a ton of properties in 2024. But probably what I'm most excited about is people within my network to have an opportunity to invest on these deals with us, to go invest on a fix and flip, to go buy a sub-2 deal that we find, or come invest in a property that we buy, fix up, and renovate, and be able to invest in our fund and be able to actually maybe get the tax write-offs and get the depreciation and get appreciation of the assets. I'm really excited to bring in private money investors who want to partner on deals in our fund. But another thing we've been doing for years and we're going to continue to do is bring in people who want to invest on a short-term flip. This is a great way to get in, very simple way to put your money to work and not have it be tied up for over a long duration. It can be 3 to 6 or 9 months, and you get to go and you get to participate on a specific deal. You get to actually go see this transformation of our house in a flip and be secured by a hard asset. So these are several different ways that you can actually get into the real estate game. To recap, you can become an active investor and buy one of our deals. You could go and be a private money lender on one of our fix and flips and be a little bit more short-term and turn your money multiple times. Or if you're really looking for the bigger gains and being able to be a part of the deal and get the depreciation, get all the benefits of being a real estate investor, I encourage you to look into our fund, because then you can take advantage of all the different things that our company is doing. And really, ultimately, my goal is to help you achieve your real estate goals.